Guys, thanks so much for joining me. My name is Alejandro Zambrano, Chief Market Strategist with ATFX in London. And we're having some technical issues here in the morning, but should be live now. Still no sound. Okay, that's a bit weird. Guys, are you still having no sound on your end? The system is telling me that we're actually all fine here. It's okay now. Good. Thanks so much, Ronnie. Awesome. Okay, so let's go live then, and let's not waste too much more time. Let's begin. And as always, I need to stress the trading financial markets, unfortunately, is high risk, and we may lose all of our invested money. And as well, I want to welcome all of you guys here. We have Antonio Jimenez, we have Don Holm, and we have Abu, John, and Marvin, Ronnie Giles, and Vincenzo. Guys, thanks so much for joining me. Okay, good. Let's kick off, guys. It's a bit quiet, but we're seeing a bit of action in gold prices and a bit in the Aussie dollars. We're going to talk about that. But let's begin in chronological order, and we'll kick off with the euro. Now, the euro here triggered a small head and shoulders. If you look at this, this is a 1 hour chart, and you have a head, left, right shoulder. This pattern triggered already yesterday, and we had a retest of the neckline, and now resumption. I think the way this looks like, we're gonna take out yesterday's high, and that should lift the price potentially to the head and shoulders target, which is at 113.23. Now, because it's such a short-term setup and pattern, I don't actually trade those very short-term patterns because it's a bit random. But the way this is looking right now with the euro, following yesterday's bullish price action, I suspect that we may actually see the price again go upwards and be 13.50 and 114, because we're within this range really, and the market does not want to trade lower. However, though, on Wednesday we have the ECB rate meeting, and I'm leaning towards that they're going to be slightly more dovish, given the soft inflation figures we've seen from Europe lately and the soft numbers we've seen from Germany. I think that can definitely tilt them slightly more to the bearish side. Remember, they surprised the market last time by talking about Teltros, which I think should be introduced later this year. Teltros is a form of quantitative easing where they lend money to the banks at feasible at good rates. As for GBP versus the USD, there's not a lot of activity here, but the trend is bullish above 129.52. And I suspect the market may go up towards 133 from a purely technical perspective. Because of Brexit and all of that, just about anything can happen, but technically we're still bullish above this level. If we take this out, we're probably going to go lower. As for the dollar yen, it's also consolidating further. Unfortunately, there's not too much to do here. It is just stuck in a range. The whole Forex market is stuck. And yesterday, I published an article in Leap Rate, and let's see if I can show you that. I don't actually have to show you. I can just do it here. But the volatility in the euro right now, last time it was this low was in 2014. That's how long time ago volatility was this low. This is the average true range based on the daily chart. And you can see here how in July 2014, volatility dropped as low as it did now. And then in September, volatility had picked up. Now, after consolidation, after rest, you have action, activity. So the fact that we're down at these levels is actually good for the patient trader, because it just tells us that we're going to have some very interesting moves relatively soon. Before that, we actually need to go back to 2017. Now, volatility did not drop as much that year, but it came very close to the ATR we are at right now. The average true range right now is 53 pip. So on average for the last 14 days, the average range in the euro dollar has been 53 pips, which is extremely low. Even in 2017 or 2007, the market consolidated for a while, but then we had, a nice little classic continuation of this uptrend and a break here of the double top. You have this section here. We took that out. I'm not sure this could be qualified as like an ascending triangle, but we had that break and then market moved up higher. Whereas in 2014, the market was also very, very boring. And then it was the beginning of probably one of the easiest time to trade Forex for like many, many years, where the market slowly every day was moving lower. So everybody could catch on. Because sometimes, like I remember here in 2008, the market declined and it was quite volatile, and went down quickly and then up quickly and then down and then substantially higher. So a lot of people got, it wasn't easy. But in 2014, I remember it was very obvious what's going on, so everybody was just shorting. So maybe something similar is going to happen with the euro now. Not necessarily that aggressive move, because there's not like a huge imbalance in the world as far as I can see. But break to the low could potentially cause the euro to trade much lower. Now, I was talking about the Aussie dollar, and the problem with the Aussie dollar here is the same as with many other markets. It's just trading sideways. This is going to be part of the article I'm going to publish in an hour or so on ATFX website. So within that triangle pattern, and I'm not a big fan of trading triangles, but when we break, and if we take out the February 27th high, the market may go slightly upwards. Take out 69.79 and we may trade slightly lower. What's interesting here is actually that the market is sort of just consolidated. It's going upwards today. It might go a little bit higher, but I don't really suspect to see this actually breaking higher just yet. Another market that is up a bit today is gold prices, and I did a video on this yesterday, and I think we can go up maybe to 1,310 and 1,320, but eventually, I mean, this could morph into some sort of a triangle, but I still suspect we can probably trade lower here, take out the lows, and we trade much lower. The head and shoulders target is suggesting a 66 pip drop, so Russell-Wood ratio wise, it's really interesting to be short on a break to the March low. As for crude oil prices, they're also up today, so they're adding to the gains, and there's not too much to do here right now. The idea was to buy here and here and book profits here. Now the market has continued to trade upwards, but just because it has done that doesn't mean that this is more relevant to buy now than it was yesterday. In fact, it's the other way around. I still think we need to see a bit of a pullback, and if you can notice the difference here, the trend of funding level is now here. I had it here, it's now here at 59.74. The fib level goes from low to high, so I'm thinking first fib 50% correction. If we do get a 50% correction, that would not surprise me, because these people, they know they bought at higher levels, and if we trade below these levels, they're gonna get panic and they will try to push it a little bit lower. So still think we can go down and then up, okay? As for S&P 500, it's a very similar situation. The market has gone up quite a bit. Now these markets tend to just increase and continue to gain independently really of being overbought or overbought, sorry. But again, we still need that pullback. Remember, we talked about buying down here. So I don't want to buy up here. This is, if you bought down here and you're still holding on, booking 50%, if not 100%, makes perfect sense. German DAX, you really want to keep an eye on this one. We have this big head and shoulders. I shared several head and shoulders with you guys. Shared this one here in January, which I traded myself. I only got half of it, so bought here, book half of the position here, and then it went all the way back to my entry, so I got out of break even. And then I did try to trade here, but I got stopped out. It's more clear now, though, that this is a head and shoulders. Left, right shoulder, head, right? Neckline was here. I think if we do have a retest, would not surprise me. But as long as you're above 11,637, I think people are gonna buy. Russell-Wood ratio here is also really good still. Like if we revisit the breakout point, that will be 11,828. The stop goes just below the April 2nd low. That will be 11,632. And then we target this first high. Then the Russell-Wood ratio is 3.18, as you can see here. If we actually reach the head and shoulders target, then your risk reward ratio is 6.42. So that's not a bad trade at all. Okay, I think we covered most markets. The only thing we didn't cover are cryptos. Bitcoin still going strong, is at the highs, but it's not really going so much higher. I did share an Ethereum idea with you guys. I've done that in the videos on ATFX.com, and here as well. You know, we reached upwards, it's in the money. If it revisits the breakout point at 166, I think people will be buying. Still targeting something like 263. As for Ripple, we breached this high, but there hasn't been too much activity. Stop loss has been reduced from being down here to now 32.53. This should technically be a break-even trade, depending on where you entered, but hopefully it can still go upwards. All of those markets we covered here, you can actually trade them with ATFX. You have 4 cryptos, US stock markets, US stock market indices, and the Chinese stock market indices, and the DAX 30, and so on, plus a bunch of currencies. And if you do decide to trade and you're looking for something, check out the Retail Edge account. It's good because the standard account is sort of what you will get with many other brokers. But these are some very, very, very tight brokers for people that deposit a minimum of 5,000 euros or 5,000 pounds or dollars, depending on your base account. And these sort of spreads, if you want to have this, with some brokers, you need to deposit up to 25,000 euros. But you get this here for 5. Not only that, you also get coaching sessions with me. And that's free. You just need to open the account and you get access to 2 30-minute coaching sessions. Later on this month as well, we're going to do an education course. Some of you guys know me from Londinium FX. If you check that out, you'll see that the courses there are priced at $299. But some of the stuff that I used to do before used to be priced at $2,000, 2,000 pounds. You're gonna take sort of the best, create a totally new course, and create new content, which again is gonna be offered for free. It's a 3-hour video. I suspect it's gonna be live maybe this week, next month, and that again is for people that open up accounts with ATFX. Okay, so we got a question here from Marvin. Thank you so much for the question, Marvin, and thanks so much for the likes and retweets, both on Facebook and Twitter. I really like that. So Marvin says, hi Alex, US oil is just above the 61.8 fib from October high to December low. Do you think this area will have much effect on further price? So I think in regards to crude oil prices that we are starting to get to, you know, not extreme levels, but we have corrected, as you say, a substantial amount of the decline. So we actually, okay, I'm looking at this. According to my price here, we're actually above that 3rd fib. So when something trades beyond all 3 fibs, it's an indication that this move could have been false, and we're gonna retrace almost all of it. So the fact that price is here tells me we could probably head higher to maybe 68.72, and that 68.72 level is the target of this head and shoulders, difference between head and the neckline added to the breakout here. So the way this looks like, yes, I think we can go higher, and I don't think the fib levels are going to influence too much. However, it doesn't mean, you know, we should buy a lot of better range on this up here. We still need that pullback, and I still wouldn't bet the range on this. I was trying to buy down here, and I also bought some other things like gas oil. Net effect though, because of the choppy market, I lost. So I'm actually down a bit this year. I'm down with about 5% right now. And And yeah, 5%. But obviously the market is now ticking up again, starting to become more active, and I really like that. From October really last year, it's been a difficult market for my system, so that's why I had this little down move. But we have still some solid like 9 months left, or actually 8 months left. So I still think we can have some really good action later this year. What you're looking at here, by the way, is the office here at ATFX. This is just part of the office. They just created this little section, and here's where I'm sitting in their offices. Okay, I think we're going to wrap things up. There's not too many more questions. If you have anything during the day, as you know, you can always reach me via Twitter at AlexFX. That's the best way to reach out to me. So there we go, AlexFX00. You can always just ping me, send me a direct message. There's also other ways of reaching out in my Vincenzo says nice and cozy office. Yeah, it's okay. They just renovated this section here. They need to get some paint in here. But that's my opinion. But thank you, Vincenzo. I'm not going to tell that to the office manager, because then they're not going to do any work. Okay, we're going to wrap things up here, guys. Again, Twitter and as well in the chat, alejandro.zambrano@atfx.com. We offer all of these services, guys. If you do want to take advantage, let me know. We'll gladly help you out. It's a one-to-one here with Skype, Skype-ish, so GoToMeeting, what's it called. If you don't have a strategy, I can help you. If you have a strategy and you have some questions that you always wanted to ask, then you want to check that out. I got a question here from Ronnie. If we will be giving any seminars in Scotland in the future? I don't have anything planned. What were you thinking? Which city would be a good city in Scotland to come and visit, Ronnie? Let me know, and I'll let the sales team know. As far as I know, we're not doing anything right now. We did this event in Barcelona because we were working with some partners over there, or ATFX were working with some partners, so it made a lot of sense. But here in London, the desk is still just got going really a few months ago, so they're trying to figure things out. Edinburgh. Okay, I'll remember that, and I'll bear that in mind. I'll mention it to the guys. Okay, guys, thanks so much for joining me this morning. Ronnie, Vincenzo, Marvin, and Antonio, and everybody else here in the chat box. Don't forget to join me. You can join me tomorrow, same time here at atfx.com. Thanks so much. Bye-bye.